Well, requesting everyone to kindly settle down because here we have another interesting panel discussion happening. In keeping with the innovation theme of the Bharat Fintech Summit, we are moving on to another panel discussion dedicated to the topic, the potential of low CAC and minimal friction, crafting a strategy for dominance in the embedded finance landscape. And well, we're going to have a great co-panelist here with us. Let's welcome our co-panelist on stage, Mr. Sumoth C, Vice President and Head Digital Federal Bank, Mr. Chaitanya Adapa, Head Credit Udaan Capital, Mr. Shri Arardhi, co-founder, Fast Collab. And our moderator for this session would be Mr. Deepak Sai, Senior Consultant, the Digital Fifth. Let's welcome everyone on stage.
Yeah. Good morning, everyone. Thank you for being present today. And we have a really interesting discussion today coming out, understanding the low-cost acquisition models to understand how we can craft a strategy for the embedded finance partnerships and embedded finance business, which is actually growing. And if at all we see the digital transformation, open banking being the buzzwords of the last 10 odd years, most of the financial institutions have been trying to understand how they seamlessly bring in the digital services. And post-creation of these digital services, bringing the customers back to utilizing these digital services has been of a prominence. And that's where we see embedded finance has actually picked up in the last 2 to 3 odd years in terms of the, not just on improving the business as a potential, but also trying to create personalized experiences to the customers, bringing the services to the customer. So that's where the importance of the whole, market has been shaping across. So I would like to thank our fantastic panelists for joining today. And before we deep dive into the session, I request them to maybe introduce themselves so that our audience are well informed on the background and what we are going to share. And sharing it to Sumoth in case if you want to.
Yeah, thanks, Deepak. Good afternoon, everyone. Myself, Sumoth. Personally, I head the digital banking department of Federal Bank, which encompasses all the digital initiatives of the bank, including all the channels, all the initiatives like payment initiatives, all the new initiatives like maybe CBDC, digital currencies, all those things. Yeah. And I just completed 27 years in the bank. Thank you.
Hi, everyone. Good afternoon. I'm Chaitanya. I lead the lending business at Udaan. It's called Udaan Capital. On a day-to-day basis, what I essentially do is figure out how to lend to the retail customer base of Udaan, how to lend to the vendor base of Udaan. And we also have an independent business where we provide financing solutions to ecosystems of brands. Channel financing is what we do, even outside of Udaan. So that's been my last 7 years of experience.
Good afternoon, everybody. I'm Sri. I'm the co-founder at Fast Collab. So unlike the fintech world, we come from SaaS, travel and expenses as a product portfolio. So our products are used by the corporates for employee travel, employee reimbursements, end-to-end. That is what we do. And we are based out of Hyderabad. Fintech, SaaS, we want to be SaaS fintech, at the moment SaaS.
Sure. Thank you. And I would like to start my discussion with Sumoth. Maybe just wanted to understand, we know that Federal has been one of the market leaders in terms of the digital transformation activities and is one of the first movers in several digital initiatives. So just wanted to pick your understanding, other than for, looking at how low-cost acquisition models can run in the embedded financing, how is digital transformation contributing towards the, overall business potential as such, and how do you see it shaping in the next maybe couple of years?
Thanks, Deepak, for that. Of course, as you mentioned, Federal Bank is doing many digital initiatives, maybe on the onboarding side, on the lending side, on the digital. So recently, I was reading a survey report which says a customer, or I can say prospective customer, maybe looks at 9 to 10 options for a product, maybe spanning over a period of 45 to 60 days before he comes to finalizing a particular product. So that means the world is right now open in the fingertips. He can understand any product, which bank or which institution is offering which product and all. So why I was quoting this is that onboarding a customer it's not that much easy in a digital world. So maybe we can call a customer or we can attract a customer to a funnel of the chat. But taking that customer from the top of the funnel to the end of the funnel for a conversion, we have multiple steps which we have to look at, which can save the cost for a bank for an acquisition. So maybe it can be the how to design an onboarding journey with maybe minimum clicks for a customer to complete the journey. Here, analytics plays a very important role. We have to analyze if a customer comes to that particular channel, getting minimum details, how we can pre-populate some of the data fields of that customer so that with a minimum clicks, he'll be able to complete the journey. That's one thing. Second, the design or a UI UX design of that particular onboarding flow. How it's as much intuitive as possible so that customer doesn't get stuck in any of the journeys. So these are all very critical parts which is playing maybe in the top or middle part of the funnel. But if we come to the lower part of the funnel where the actual conversion happens, again, analytics plays a very key role, analyzing his data and gives a positive confirmation or negative confirmation at that stage itself whether you are eligible for a particular product or not eligible. If you are eligible for a particular series of product, which is the most suitable product this customer requires. So these are all very critical part in the customer journeys to acquire a customer. That's one thing. Second, on the embedded side, you are specifically asking the embedded side. Federal Bank is also doing so many initiatives. Maybe over last few months, actually, we are tied up with 2 or 3 largest OEM car manufacturers in the country, where normally a customer or a person goes to maybe a car website to maybe choose his car or not. So we have embedded our digital lending journey inside that purchase process itself in tie-up with these OEMs, where maybe he prefers or he particularly chooses a particular variant, which a particular model of the car. And in the journey itself, Federal Bank tells him whether he is eligible for that particular loan amount for that particular buying that vehicle. So in the digital journey itself, we are giving an in-principle approval to the customer. Yeah, you are eligible. Maybe you have to complete certain paper formalities, especially in a vehicle loan. There are certain other formalities which can't be completed digitally. But so that's how we are embedding the journeys into the ecosystem itself, so that the customer's journey through the life cycle is seamless, easy for to understand, which reduces the cost of acquisition for the institutions also. Yeah, that's thanks.
Thank you. And taking the context to a slightly, in an enhanced version, we see that embedded finance is a double-edged sword where we see a B2B focus also coming in. As you were saying, you also work on the vendor focus side, and also you have the retail focus side. So how different is it customer experience that is going to transform from a B2C side to the B2C or an MSME side, if at all we have to focus upon from your experience, Chaitanya, if you can help us?
Understood. So I think on the B2B side, so I worked with Flipkart before Udaan, and we actually operated with a lot of B2C muscle memory when we moved from Flipkart to Udaan. And my biggest learning has been on the B2B side, the markets have a lot of history and norms that have developed over decades, possibly centuries, in terms of how margin and credit period as well as the credit terms, how they interplay. And this is very nuanced, this is very specific. Almost at a category by category level, this will be different. It will be different at a geography by geography level. If you look at grain trade in UP versus if you look at grain trade in Mandya, it will be very different in terms of what credit terms they operate with. On the B2C side, at least from wearing an e-commerce hat, I did not see that level of variation in terms of how the customer approaches the purchase. Obviously, there are, you do segment your customers, etc. In the B2C world as well. But here, the level of variation and diversity is very, very high. So when you are creating an embedded finance product for the B2B world as opposed to the B2C world, that nuance is the most important one. So the obvious pieces of when you're doing embedded finance is, you obviously map out your customer touch points, the channels that you interact with the customers in, and then you figure out, okay, which of these touch points do I use, like Sumoth sir was referring to earlier, which of these touch points do I use to, either pitch my product or do a collection nudge or something like that. You would also, the other obvious first principles of approach is to look at what data you already have collected on the customer as the usual course of your business, and how do I leverage it to figure out whom to lend to, whom not to lend to. That's also an obvious one. This third one that I'm talking about, which is what is the interplay between commerce and credit, right? The larger transaction that's happening between the platform and the customer. And when credit comes in, how does that change the entire dynamic of that transaction? How do the margins change? What is the bottom line of each of the part? How does that get impacted? A. And B, how has the market solved that over its history, right? Because these are markets that have been running for very long periods of time. Like, how have they solved it in history? Taking these two into consideration is very, very important. The moment you take a embedded finance decision which kind of ignores these two, you will either have adverse selection or you'll have a product which just doesn't take off, right? So, and this nuance has to be captured at a category by category, almost at a geography by geography level, and somehow brought into the product.
Thank you. Understanding the experiential changes that we need to do across the platforms, I want to check with you, Shri. How is it going to be different in terms of your experience of building a tech stack and maintaining these experiential changes across the platforms coming in? As we see, there are similar tech stack that I need to integrate with an e-commerce site or maybe then a gig commerce site, then moving to another maybe a health site where they're trying to offer some other situation of a loan. So how do you see these embedded products or embedded finance products transforming across the partners in terms of these journeys and the experience for the customer?
See, it is well said that actually every business is a financial services business. Every business. So we are, whatever business you take at the end of the day is financial services is involved in it. So where we need to focus is what are those journeys that the individual users or employees are going to. In our case, it is travel and expenses. So that too on the business side, not on the retail side. So if you want to go on the retail side, you would go to Make My Trip, or you discover something, you book something, and then you go. But when you come to business side, it is completely different user journey. So companies booking your flights or hotels, companies paying for your expenses. So that journey of how the employee is going, raising requests to approvals to getting it done. So in that process, the financial instrument involved in that is varied. So especially on the B2B side, a lot of credit is given by the travel agencies to the corporates. So in that case, it is bank-to-bank transaction when the invoice payments are happening. Some corporates in India give corporate cards for transactions. Again, I see a trust deficiency there. Why should I give card to my employee and I don't really trust the employee to use it very carefully? So there's a lot of control that happens. A lot of companies do ask, go spend your money and then come back and reimburse. So I kind of question, why would employee go for a company visit and spend their own money, come back and claim it? So there is, again, I think Western markets have moved on to more digital instruments there. But Indian markets are still a bit lagging behind in that front as well. But overall, if you focus on user journeys and then embed the instruments within that, it makes a lot of sense.
So, I'd like to check for an open discussion across. So, we have been discussing about the journeys, experiences, and we've been, innovating in our tech stack on improving these experiences for the customers across the partner channels. But once we start getting into, acquisition of new partners, it so happens our business experiences are somewhat in terms only limited to the integration, whereas the business potential or the business decisions are lying with the partners, right? So how do we actually kind of share the synergies between how quickly not only we can just take the particular product to the market or improve these particular journeys, but also implement these low cost acquisition models or faster customer acquisition models into the picture through our partner channels as well, through our past experiences? How do we actually look into functioning in synergies with our partners on that side? Yeah, we can have an open discussion across.
When you come to the partnerships or maybe fintech partnerships, maybe a federal bank is doing a lot of such partnerships. So we normally look at the partners, fintech companies, not as some competitors, but as a collaborative attempt where both the institutions get benefited in a somewhat manner. Maybe I can quote one or two examples. We have done a partnership with a company called DGV Technologies, which is based in Gujarat, Where we are actually doing is we are completely digitizing the milk dairy farmers' journey, right from the milk pouring data to getting the reimbursement of that milk which they supply to the societies back to the farmers' accounts digitally. So where, maybe I'll take one step back since I have the partners. Any partnership will succeed only if they have some meetings of the mind. It's not that we just partnered with a particular company and just leave everything to that. That will not work in a partnership model. Basically, there should be meeting of mind between the two partners, where either it can be tech integrations or it's a compliance or risk management. I think there should be meeting of minds. And coming back to this particular partnership, so where we started with entirely digitizing the milk pouring data and reimbursing the milk, we took another step forward along with that partner, where right now we are giving bovine loans based on the data which we had built over a period of years. We know how much a particular farmer is supplying milk to the society. So based on that data analytics and all, right now we are offering bovine loans to those farmers to purchase cattle. So this partner has built up a cattle marketplace in a mobile, and the farmers can directly go to the marketplace and choose a particular cattle, and if he is eligible, he can get that loan and purchase the cattle. So that's how we build the partnerships. That's one example. Another example, we are partnered with another company for doorstep gold loans. So again, these models where it's a faster reach to the customers, where certain geographies where bank may not be able to reach that particular end customer. So these partners help us to reach to that particular last mile connectivity, get those customers to the institution through the digital means, and of course we are offering the banking services to those customers. That's how we look at these partnership models.
Chaitanya, how would you like to go about this?
So I think firstly I would distinguish between cross-selling a financial product from an embedded finance product. An embedded finance product, by its very definition, would be interweaved into the overall experience, the commercial experience, the transactional experience that's already happening, very deeply interweaved, right? So that essentially means whoever is doing that embedding, whether it's a fintech partner, whether it's the bank or NBFC directly, or maybe it's the platform itself, needs to have a fair level of autonomy and also fair amount of knowledge in terms of what the customer's expectations are and the business P&L's expectations are, and bring all of it together into a product that's unique and kind of tailor-made for that environment, for that context. That's embedded finance. As opposed to, let's say, there's a transaction that's already happening and I'm going to sell it short, term that on top of it, or cross-sell. That's not embedded finance, at least the definition that I'm using right now. Now, for a partnership like that to succeed, and we've been on the we've worked with 7-8 banking partners, large NBFC partners as well, to create these experiences. And I think when you're wearing the fintech hat, the first thing to know is that you have to respect the compliance and the risk needs of the financial institution. So that's I think this is a baseline, right? You have to respect that, and you have to do enough for the financial institution to build that trust with them, that yes, you are going to act in a responsible way. Only when they build that trust, they're able to give you the autonomy and open up the pipes to their LMSs or LOSs to build the product that you want, right? So that's one very, very important part. The second one is just the meeting of the commercial interests, right? Like, is my partner making enough out of this, out of the way this deal is structured, right? The platform where we are embedding the financial product, is that making enough? Is there enough benefit? It may not directly be commercial, maybe repeat rates are going up, maybe wallet share is going up, whatever that benefit is that enough? Just making sure that whichever way the product is designed checks off those boxes. And last, but the most important is whatever product you're putting it out there, is it relevant for the customer? And just doing a lot of groundwork on that before jumping into actually building the product out or launching it. That I think is very, very important. Maybe spend another quarter or 2 quarters if required to do that groundwork, and then get into actually building the product. Because in lending products, it's very difficult to iterate. Once it's out there and you see that the NPS are not in line, or the customers are not taking up, the partner may lose interest. So you want to make sure you have lined up everything. You've built the trust around compliance and risk. You're doing the right things, and you're showing that you're doing the right things in an establishable way. And you're checking all the boxes in terms of commercial interest for all the parties involved, as well as the experience for the customer. Right?
Okay. And Shri, how about you?
See, for me, partnership is at two levels. One is at a business level, and then there is a technology level side of it, especially in the embedded finance or embedded businesses. So the idea is everybody partnering with everybody so that I can offer everything to my customer. So if you look at our business on the enterprise tech side, we spend about 6 to 9 months to acquire a customer. Okay, so this is quite a long life cycle that we go through, making presentations, prototyping, proof of concepts, demonstrating the tech capabilities, etc., etc., etc. So there's quite a bit of an effort that goes in. So the cost of acquisition is quite high in that. So the reason why we invest is that we can nurture the customer over the number of years and then get a better return on investment. Now then that get extended to embedded partnerships or embedded finance. So quite often what I come across is, so when we get into that at a business level, one, it should make a business sense, profitability, and whether everybody is making money, there are enough margins in that or not. Second question that comes that probably don't talk about it very openly is who owns the customer, right? So I've spent 6 to 12 months to acquire a customer, and probably a lot of dollars goes into it. Then there is also a question, at least in the spaces that I've seen. So if people stepping onto each other, and once we get into that, so that is another area that we have to be really careful to make it more smoother. But having said that, not everybody can do everything. So we need to partner, we need to alliance with others to do it. So that is to be done. Then at the technology level, how it can be more frictionless. Technologies have evolved. Everybody is talking about APIs. REST APIs, or still file processing still exists, especially with a lot of banks that we see. So if corporates use card, how the transaction is coming back into the system, still a file, encrypted file, so it's not real time. So there are standards evolved around APIs. In some cases, even I figure out, we can also use queues to exchange the data, so that there is a bit of a decoupling between partners. I give you something, it's like a relay race is what I see. So I give you something which is in a agreed format, then you take it and move forward from it. So otherwise, if your system is down, what will I do with my transaction? Or if my system is down, what will you do with your transaction? So ensuring the transaction happens is also a very important aspect to it. Especially depends on the kind of transaction. Where we are, you need to book a flight, The confirmation has to be real time. But if I'm ordering something on an Amazon or a Flipkart, so I can probably wait for 2 hours for somebody to tell me that, okay, my order has gone through. I don't really need real time, though it is real time for that matter. So these are some of the aspects that I would look at it from integration point of view.
Sure. And continuing on the thought process of the embedded partnerships coming on the business side as well as the technology side. We also see embedded players coming into the existence in terms of a B2B2C context, right? So there is an enabler platform who's trying to integrate with the technology from the banks and the financial institutions, and also trying to provide these services to the other applications where they can integrate, right? So that is where I believe the serviceability on who owns this particular customer is actually increasing, because in the last 2 or 3 assignments that we were actually partnering with fintechs, this was exactly the challenge that we were trying to address. And there was also a lot of issue in terms of who's owning this particular data and until what extent the processing of this data should be utilized to nudge this particular customer. So in terms of these two working across, while I'll require the data to understand the processes and also service the customer, and also the serviceability, me being a platform enabler, let's say, I only can provide certain extent. As a customer or another consumer platform, I only have understanding of my services and I don't have understanding of the financial services. Whereas for the financial services platform, it was just a technology integration with the player. So how do we streamline this particular conundrum that we see, where the serviceability and the data utilization will be the key to work in synergies to solve the problem, right? So, yeah.
Maybe I will just touch upon from the banking side, especially, banks are heavily regulated in the industry. So from the regulatory point of view, stand is very clear. If you look at whether it's a digital lending guidelines, which has come last year, or whether it's IT outsourcing guidelines, or whether it's IT governance guidelines, it's very clear the customer ultimately belongs to the financial institutions, who is the partner. Second, the data again belongs to the institution who partners the fintechs. So because especially we can work only with the regulatory guidelines, with the regulatory prescription. So regulators are very clear on these 2 points which you specifically mentioned: data ownership, customer ownership. From the regulatory point of view, it's very clearly defined, very clearly articulated that banks or NBFCs who are in the regulatory entity, RAs, normally they call us RAs, regulatory entities, are the owners. But of course, for a fintech partner to work with, they require to have certain data points. But that is decided between the institutions and fintech, especially when DPDP is also coming to the picture. The previous session, session was the DPDP. So once that is also already there, so it's very clear that which all partners or which all entities the data can be shared, up to what extent, what parameters can be shared. So within that boundaries, of course, whatever data can be shared, whatever non-personalized or non-PII data can be shared, of course, that can be shared with those partners who can work on that. But from the regulatory perspective, it's very clear, it's very clearly defined who is the owner of that particular customer of the data. That's I just want to add here.
Would you like to take anything?
No, the RBI has laid it out very clearly. Whether the partner is taking care of the customer or not, the financial institution must take care of the customer service needs. So there is no gray area over there, absolutely. And the protection of the data of the customer, at least the loan product related data, is the responsibility of the financial institution. And it has to ensure that there are checks, balances, audits on whomever they are partnering with to ensure that all that is happening. And so that clarity is there. In practice, what I've seen is that whenever you finance into a partner, into a brand ecosystem, where the service levels, where maybe the products are not, the guarantee is not covering the products well, or maybe the post-sales service of the product is not so great, maybe the returns policy is not so good, maybe the call center is not so responsive. Whenever we have gone into an environment like that, we have invariably seen the portfolio not perform well. So while there are guidelines that the RBI says, the bank has to ensure customer service levels are there, it's very important for the financial institution to also pick partners who respect the customer service needs. Because if you don't do that, you will have NPS. The customer will come back and say, I bought this from you, or I've taken this service from you on financed by such and such party, but it's not working for me. So I'm going to, some of the customers stand up and say, I'm going to hold back on the repayments of my loan. It's a day in, day out thing. So it's very, very important to pick a partner who understands the RBI stance, but also takes on the responsibility of customer service just as seriously, right? For the portfolio to perform well.
And Shri, how about you?
For me, there's a data ownership and there's a customer ownership, two different aspects to it. So when you look at embedded finance or embedded products, typically, so where I look at it from a travel background point of view, let's say if you're booking a flight to Indigo, so who owns the customer? Indigo owns the customer, or I own the customer? So I am facilitating the process, right? So Indigo gets embedded into an intermediary system, that gets embedded into a travel agent system, that gets embedded into my system, and I get embedded into an enterprise system. So there are multiple levels here, it's just not one level of it. So data flows through all of these things. I think data is owned by everybody, actually. It's not just by one person. So, but there are guidelines like GDPR, and I think Indian data regulations also are there. So data can be owned by multiple parties involved in this, but how you process the data and how you take care of the security of the data is important aspect of it. You can use it to process the data, but you can't use it to leak the data. So if you make a differentiation. But I think in terms of the customer ownership, the guy who's initiating the transaction has spent, like we have spent, let's say 6 to 12 months to acquire a customer. So I own the customer. And I have to ensure that is taken care well. And the other point that you mentioned, B2B to B2C, B2B to C, is I think is a real opportunity. That's where the customer acquisition cost will significantly drop. Yeah. So I spend 6 to 9 months to acquire a customer. Let's say a bank using my travel and expenses product, using for an employee travel. Now the same person can go to Goa or Jammu and Kashmir for a holiday, can use the same product to book for personal travel as well. So there my customer acquisition cost becomes zero. So that's really what is a very significant area, not primary area of business focus. But our primary area will be to acquire a B2B customer. But then eventually if it happens B2C, B2B2C, that is something that everybody should aspire for.
Yeah.
Definitely.
Yeah. And continuing this discussion and understanding, as we thought, I mean, as of today, customers check 10 to 15 different applications before they onboard onto something, right? And as a financial services institution, or maybe as a, I mean, the person who's actually facilitating this particular service, when I'm integrated with a third-party partner, and we see we are concentrating on conversion of a particular customer, right? But there are also several customers whom we are trying to nudge across the journey, be it your messages or be it personalized other channels that we try and communicate. So I mean, is there any impact in terms, let's say, happy customer who's converted is happy, but there are also certain set of customers who's been receiving the communication, and is there any other way that that we can transform this personalized communication to understand the intent of the customer and further nudge it, or how do we actually ensure the experience as such across where the customer ownership is also there and the data ownership, because these two are with the two different related parties, right, as of today when we speak. So how do we bring that to actually provide an optimal experience to the customer on a platform?
If I got your question correctly, maybe the customer optimal experience, or the customer comes to a platform and that gets, maybe he gets an offer from an institution, but he gets dropped out, or finally he knows that he's not. There, I will say that data analytics plays a very key role, especially. We are having multiple products where pre-approved products are there, especially on credit cards and digital lending, personal loans and all. We have got a pre-approved loan products where, based on the transaction history and the balance history with the customer, we do some data mining and find out a particular chunk of customers who are maybe eligible for a particular product. Then for such customers, of course, we normally give a very clear outward communication that you are eligible for this particular product. Maybe you can come to, maybe it can be a WhatsApp platform or a portal platform where you can come, or a mobile banking platform, you can come and avail the particular service. So there, we are ensuring that we are providing that particular service which bank is committed to that customer. He's 100% satisfied. But of course, there are certain other things where earlier we used to do that spray and pray approach. Maybe we'll send a message to the lakhs of customers, maybe we'll get conversions. But of course, as you correctly point, their customer may not be satisfied. So there, what Federal Bank's normal approach is that we don't do that spray and pray approach to the entire segment of customers where it can backfire to the institution. So even if it's not a pre-approved customer, we do some data analytics in the background and say he is eligible, but up to what extent at this point of time we may not be able to tell with the data available with us. But we prompt the customer, maybe he can share some more data with us, maybe some ITR returns or some other. Right now, maybe add one point. This account aggregator platform right now, which is coming, will be playing a critical role here. So that's actually a good tool for a customer. Maybe some of the data is not available with us. We are blind to that data, but customer may make some other relationship. So where this account aggregated data is very playing a critical role there, where customer can share his account aggregator handle, where we can get those data also, which not residing with us, but residing with some other institutions. Based on that data, we can slice and dice the data, and we can give a very clear offer to the customer that you are eligible for this product, so that he doesn't go back from the platform dissatisfied. So I totally agree with your point.
Yeah. Anything that you want to concentrate on, Chaitanya, on this particular aspect?
I think, as a thumb rule, nobody likes to receive an unsolicited message. Although it's 2024, I hope it just stops. That's the thumb rule, right? Now, when you're talking about an embedded finance product, ideally, you shouldn't have to get into unsolicited communication at all. It dilutes your brand as well, right, whenever you do that. Because it's an embedded finance product, it's getting embedded into some experience that's already happening. So there are touch points that are already happening. If you're an e-commerce platform, the customer is coming, he's browsing, he's doing a checkout. He's placed an order and he's just looking at when it will get delivered. There's so many opportunities to get the customer into your onboarding funnel, right? To explain the product to the customer and bring them in. If you're a B2B e-commerce platform, you have your sales guy who will possibly be visiting the customer every week, every couple of weeks. There'll be a delivery guy who will keep going almost every 2-3 times a week sometimes. It's a very high frequency, high touch business. Use those opportunities to kind of talk about this to the customer. I think if you're having to do unsolicited push messages for selling a product, it's most probably a cross-sell and not an embedded finance product. Right? If you're doing the embedded finance product right, you will have n number of opportunities during the customer purchase cycle to kind of have this conversation at the right time, which is contextually makes sense to the customer.
Sure. Anything that you want to quickly take up on this?
See, for me, in this, the brand positioning is very important. The example that comes to my mind is, so we were all using Ola for booking a cab. Now Ola suddenly says, I have these crores of customers, so I have spent a lot of money to acquire them. So now I can sell other products to the same customer so that my customer acquisition cost is low. Now they offer bikes, apparently they will also come with car. But see, I have always used Ola as a cab vendor. So how does it reflect onto me as a consumer to see it? So do I want a Ola car parking outside my house, and people will probably suddenly see me as a cab driver instead of something else? So it's a very sensitive issue, and if you don't position it correctly, you'll get it wrong. So when you embed the products, it applies the same. So now there is no difference. Everybody wants to have a super app. So I want my app to be used for travel and expenses because that person is coming. I want to use the same app for booking your personal holidays. Now because you are there, I want to do your payroll. I want to also lend you if you need any money. I also want to cater to your car cleaning services because you are with me. You must be having a car, and I can also offer some car cleaning services at your home, right? So there is no end to this embedding one with other. So the brand positioning becomes very important. So if you say upfront and then create that awareness within the customer, so then it's okay. Otherwise, you have to spend a lot of dollars to spend the brand awareness.
Thank you.
That's what I would say.
Thank you. Thank you for touching upon that important point of brand positioning, where we have explored several aspects on how embedded finance can actually help in a dual system, where it is actually helping improve the business potential, also acquire the customers at the lower cost, and also streamline the services, get the data, also understand the customer better, build a better persona, and provide better experience. At the same time, positioning that brand and trying to understand what are the services that we should actually concentrate upon, or what are my core services that I would like to additionally provide to my particular customers who are available on my platform will be the key. And as of today, it is, in terms of the market mix that we see, achieving that right product market mix is what, in terms of the brand, is what everyone will start focusing on maybe in the next couple of odd years, because we also see that customers bouncing back saying we don't want this, or so those things are going to start coming up with the DPDPA also coming in, and the data also very scarcely going to be available, customers also having better control on the data. It'll further evolve into getting that market potential, also getting the right product market mix, and getting the brand positioning also right. So thank you all. Thank you for giving such insightful options. Thank you. Thank you.
Thank you. Thank you, everyone, for this insightful session. And one group picture. Just come forward a little.